Welcome back. Well, the crash in Bitcoin continues this morning. Bitcoin now below 17,000 as the saga of crypto exchange FTX explodes. The CEO, Sam Bankman-Fried, investigated in the Bahamas after losing nearly $2 billion in investor crypto and declared bankruptcy for the company. Joining me right now is Coin Stories podcast host and Hard Money Show host, Natalie Brunell. Natalie, it's good to see you. I got to get your take first on FTX and the reaction to Bitcoin's massive sell-off.
Good morning, Maria. Thanks for having me. Well, it's unfortunate but not surprising that Bitcoin is drawing down because it was cross-collateral with a lot of these printed out of thin air crypto tokens. And really the lesson learned here is one about trust and counterparty risk. And I think a lot of people in the crypto world are learning a painful lesson about why Bitcoin was designed and why there's really no substitute. And Bitcoin was designed because we have a system of money that's built on trust, and that trust is constantly broken. It's been broken by governments that print money, debase the currency, and steal our savings through inflation. And as you see in the case of FTX, it's broken by CEOs and companies that sell crypto tokens they print out of thin air and then use as collateral for actual dollars as if the tokens are real money. And where could they have learned that but our current system, our fiat system built on credit? So if there's a counterparty, it's credit. And honestly, Maria, this is a failure on so many levels. This was a failure of our legacy financial system attaching itself to what appears to be a crypto Ponzi scheme, fail, allowing that fiat Ponzi scheme to advertise on the Super Bowl, fail, allowing what appears to be a crypto criminal enterprise to become one of the largest donors to a political party, fail. And it was a failure that a lot of Bitcoiners saw coming, and hopefully the people responsible will be held accountable.
So, I mean, is this a nearly $500 million hack? Take us back to this disaster from the beginning of FTX. Last Monday, Bankman-Fried stated in a since-deleted tweet that the company and its assets were fine. By the end of the week, he files for bankruptcy. He announces his resignation. He flees the country. Natalie, companies do not typically go bankrupt on such short notice. What happened within those 5 days? And how serious is this? I mean, is this a hack? Is this fraud? How did it all fall apart?
I mean, it appears to be so. It was a crypto token that was printed out of thin air and essentially a company that was built on quicksand. And Maria, I mean, this is the equivalent of if you created your crypto token, which by the way, you can, let's say you called it Maria Coin, and then you sold some of it on an unregulated offshore exchange, but you kept most of it yourself and you actually washed it through a company that you own. And then you used Maria Coin as collateral for actual loans and extracted US dollars. And then on top of that, you paid off some politicians along the way. And then people started to realize that, you know what, Maria Coin is not actually real. And so they go to sell it, they short Maria Coin, and your exchange implodes because there's a run on the bank. And so this is a shining example, again, of why crypto carries a lot of risk and Bitcoin is different.
Well, I'm glad you used that analogy because people think just because they come up with a coin that it's supposed to be equivalent to $1. It's not, okay? It's a made-up thing. Miami-Dade County and the Miami Heat are now cutting ties with the crypto company. Both announced that they will be finding a new name for the FTX arena, Natalie. So little by little, you're seeing everybody jump ship here.
That's right. And something to touch on what you just said, crypto allows everyone to become like a mini version of the Federal Reserve and print their own money. And Bitcoin ends all monopolies on money and gives the power back to the individual, gives freedom to the individual. And so it's not surprising to see these big names disassociating. And what is surprising is seeing the big names and funds and celebrities that were willing to put hundreds of millions of dollars into a printed out of thin air crypto token, but not into Bitcoin, which has a 14-year track record. And honestly, I compare this a lot to the dot-com bubble because we had so much speculation over the last 2 years with all the money printing. You know, we had in the 90s, pets.com ran a Super Bowl ad. And in the 90s, it was really the birth of the internet. And there was a cathartic change. Companies, when the bubble burst, they never came back, some of them. They lost tons of money because anyone could create a website, just like how now anyone can create a crypto token. And then there were great companies after the bubble burst in the 90s and into the 2000s that actually did survive. And out of the ashes, were companies like Amazon that went on to transform the world. And so if you had drawn the conclusion back in 2000 that the internet's dead, that .com is dead, you would have been missing out. And I think that's what's happening with Bitcoin and the people that are saying Bitcoin is dead. You can't print Bitcoin out of thin air. You can print these crypto tokens, which is what FTX was doing. And so right now, just like in the 90s, 2000s, bad ideas are getting washed out.
Yeah.
The market is cleansing itself. And so yes, Bitcoin could crash more, but step back. It's still $16,000 of Bitcoin after a series of massive crypto exchange implosions. And for those of us that really have studied it, I think we know that Bitcoin will empower money over IP and give financial freedom and property rights to billions of people.
Well, you gave a great analysis there, and I was there in the 90s. I understand what you're saying. We had some gems in all of the rough, like an Amazon, like a Google. That's fine. But what I'm worried about is there a potential for this to spiral out of control and affect other assets? Because, Natalie, you know that when you're a big investor and you have a stake in one area and you're losing a lot of money in that area, you have to sell elsewhere, and you sell what you can sell. So you sell where you have liquidity. Does this FTX story have the potential to create wider losses in more assets and more traditional assets? I know you're expecting a settlement tomorrow in the lawsuit between the Securities and Exchange Commission and Ripple. The SEC's filing from 2020 alleged that Ripple Labs and two of its executives raised over $1.3 billion through an unregistered digital securities offering. This is a separate case, but your thoughts on whether any of this has the potential to take down other markets like the stock market?
Absolutely, Maria. Well, it goes to your first point. When contagion happens, it's because everything is cross-collateralized and the system at large based on credit is so fragile. So we do see Bitcoin drawing down, and we can see other assets drawing down as people liquidate in order to cover cover their margins and their shorts. And so I think what's important to know about the SEC and Ripple, and it'll be interesting to see what the verdict will be, is that the SEC charged Ripple with violating securities law and argues that it passes the Howey test. It says that it's a common enterprise, an investment contract, and a common enterprise. And the big thing I want people to remember, no matter what happens tomorrow, is right now you can go to Twitter or Google and you can find Ripple's CEO. And Ripple is the largest holder of its own token. Sound familiar? So if there's a CEO, if there's a company, if there's a pre-mine, a foundation, an ICO, it's not Bitcoin. And be careful trusting your life savings to a CEO.
Wow. All right. Good point. Natalie, it's great to see you. Please come back soon. Love your analysis. Natalie Brunell joining us this morning on All That Is Crypto.